right, everyone, welcome to the close. And of course, welcome to another day of volatility. Let's go through some of the things that are happening on the indices right now into the close and then discuss, of course, the big information that's coming out. But Microsoft after the close coming out with earnings. And then in the next session, we have the JPOW, the printer press, not the printer press, now the inflation interest machine. He's coming out and he's going to at least give some clarity, you would think, in the markets. Let's have a quick look at actually what's happened during the session so far. And the big key things are we rallied through the previous session. We've obviously called it a dead cat bounce. Why wouldn't we? Makes sense. Big movement up. And then we've had a relatively large movement down, about 3.5% since then, with a nice little resurgence here in the last bit of the session. The market is still down. We're still going down around 2% here, 14,220 into the JPOW, into the earnings. And this is because there's still a lot of uncertainty. I mean, before we even have the Fed coming out, remember, Microsoft earnings is coming. And when that comes, it will give us clarity to whether a lot of these companies are able to continue their big EPS. In the previous video, what we did here on YouTube, I think one of the biggest things that we realized was, or maybe some people have realized, was that while we do have on the surface overpriced companies, we have incredible EPS that is very consistent with some of the previous modeling structures, especially for growth. Now, the one outlier for that has to be, you would think, Apple. And that's just because Apple is still being rated at 29 PE. That is much higher than the average that we used to see between 12 or 10 and around that 22. Yeah, and this is more of a standard kind of price range. This is certainly an elevated price range. And some people are saying it's because of the growth, it's because of this or that reason. That's a big thing. And of course, with the last Amazon earnings, we also saw some EPS downgrade here. Possibly that whole idea of inventory or people getting a little bit ahead of themselves, buying a lot of stuff, and then getting fatigue on purchasing. So these are all important factors that are going into this earnings season. It's the combo that makes it such a big deal. Anyway, welcome everyone. How are you going today? Thank you so much for the 500 people already joining us this morning. Got a couple of super chats coming in here. I misspelt bull trap. Really? I mean, I did do it at 11 o'clock last night. So misspelt would more likely be mistyped. So mistyped. Let's have a quick look here. Not the best though. Let's have a look. You are where did I put bull trap? I don't even know if I put it anywhere. Anyway, doesn't matter. Gary Saini, welcome to the Stonk Squad. Thank you so much for joining us. Appreciate that. Thank you very, very much, sir. And we've also got a few other things here. We've got Durgesh coming in with a $5 super chat. Hi, Tom. When you get a chance, can we please look at Barber and PLTR? Yes, we can. And we will a little bit later on, Durgesh, but I will come back to both of those for you. And then we've got Matthew Harris, Australian $5. Are you happy Australia Day, Tom? Thank you. Yes, it is Australia Day here, isn't it? 26th. It's time to get the shrimp on the barbie, guys. We're going to get the shrimp on the barbie, as they say here in Australia. But I'm not going to do a shrimp. I am going to do a rack. I'm going to go American, doing barbecue pork baby ribs. Okay, that's what we're doing here for Australia Day. You guys have had your effect on me. I don't know what it is. I keep doing ribs. I'm meant to be doing barbecues with shrimps, but I'm just not. So yes, it's Australia Day. Happy Australia Day to anybody out there that is from Australia. Anyway, let's talk about this US market. So it's fallen, it's recovered, it's fallen again, starting to rally a little bit into the close. You would think there's going to be some relief rally here, purchasing. Basically, it's come down, it's done that kind of 50, 61.8 fib of the pull. Let's just quickly use the S&P 500 as an example. So we'll do a fib retracement here and grab that up. And then we notice that it comes down to a 61.8 fib. It's bounced off that zone. Makes sense. Dead cat bounce, comes straight back down, and then ends up somewhere around this area here in this structure before the announcement. The problem with buying, I guess, in some ways, is that when you think about it, what are you giving up if you don't purchase here? So you buy here. All right, fair enough. If you have an investment idea, that's fine. If you bought the 61.8 with the idea of getting it back into the buy close for maybe a scalp or a day trade, that's fine. But if you do buy here, let's say Microsoft gives a bad return, all of a sudden the futures will dive. They will dive. If you get a bad return out of Microsoft, the futures will turn around. I'm going to ask the community here, do you think Microsoft's going to give a bad return? I'll hold back my opinion for now, but what do you think? Do you think Microsoft's going to give a bad return? And then, of course, we're going to see clarity from the Fed after that. Now, what's good? Well, we have some form of resistance that's clearly starting to line up here on the S&P 500. I'm going to go a little bit higher than this current bull or dead cat bounce that came back up here, and maybe go like a 44.40 or something like that. And if we get clarity from the Fed and then it starts bouncing through here, for sure, this is becoming one of those turnaround stories on the markets. And I'll tell you what, people are freaking out. I watched some YouTube yesterday, and there seems to be a lot of people, rightly or wrongly, I'm not sure, but I don't think they're going to be right over the longer term, that are not only selling all their positions or selling portions, but on top of that, they're hedging up hard around here. And I don't mind a partial hedge when it's short dated, but I think you've got to hedge maybe just the event, or if that's what you feel like you need to do. Some people are hedging for 12 months. It's quite expensive to do that. So you've got to really be sure that it is going to be a fair fall. All right, let's see what everybody else thinks. Tobias said MSTF so bad. Okay. Beat. No, it will be great. Beats, but still goes down. Interesting point there, Victor. Very good. No way. Microsoft guidance are always low. Very good. Demand is bigger. Good return, bad guidance. Important. Great point there, Nadia. Bad guidance is the key there. So good return, bad forthcoming couple of months, couple of quarters. That's a big thing here. And yes, based on expected earnings, it's 5 billion higher than last earnings. So beat going to be tough. Good result, middling guidance. Microsoft will do well. People seem to be very, very thing here. And then says, no, Activision is profitable. Yes, guidance seems to be the issue. Yeah, and I think guidance is one of the biggest problems. And this is a great point that everyone's bringing up. I tend to believe exactly what you're saying, that Microsoft could beat and then also give bad guidance, which is exactly what Netflix did. I mean, obviously Netflix lost a little bit there, but at the same time, the guidance was the key. And I think that's what we're going to see across the board. Which FANG stock, though, are you most scared for to underperform? That's a good one. So just out of the FANG stocks, community, let us know. I have a theory between two. Which FANG stock do you think will underperform the most in terms of current price? So US 500, dead cat bounce, sell off, bit of a rally. We don't expect it to be above this high here ahead of the Fed unless Microsoft's earnings is good. And that's more of a guess than anything else. And that's the problem with TA sometimes into these weeks. You can definitely use TA a lot of the time, but when you sometimes have these incredible points in the market, you need to be on the small time frames to get advantages, or you need to be on the large time frames and really saying, okay, where are we? Oh, look at this daily 200 moving average, bullish hammer, no follow through from the next session. What's this going to look like? Another hammer. What have we seen before in the past? Let's put that in perspective. We have seen these types of things playing out. Let's bring up the SPX here just to give it cause and effect. So here are the two rejection wicks. And if we scroll back through history of a lot of lows, you'll notice that you do end up getting these types of wicks coming through. And often you will get two on top of each other, especially at these lows. So yes, it could be that we've just printed the not only the low for the week, but also the lowest point. I'm not sure and convinced of that yet, but we do have some very nice wicks here. Tesla will beat Amazon in revenue. So people are worried about all of these stocks, it looks like. So people are saying Facebook, Facebook, Facebook. I'm not convinced Facebook. I think it could be, I mean, it's going to be one of two. It's a complete guess, but I think it's Amazon or Apple that are going to underperform. It's Amazon or Apple in the FANG stocks. You can't put Nvidia in there just yet, Monica. But Amazon or Apple, and you guys are tending to agree that it's going to be Amazon or Apple. Not many people have said Apple. Most people are saying Amazon here. And price action, I guess, would dictate that that's what the market's thinking as well, because the market's pressuring it underneath support. They're actually pressuring this stock underneath support right now. This isn't seeing those rip rallies, whereas Apple, for whatever unknown reason, continues to be incredibly strong, even with its PE ratio very big. We have seen in the past Apple do okay. Maybe their move to their own chips has allowed them to beat the semiconductor shortages. I don't know. This stock, I feel like it's expensive, but I agree. It's between Amazon and Apple, and most of you seem to be on that point. So we've got those nice bullish pullbacks, or we have that big bullish pullback. I'm not really convinced that we're seeing a return that's worthwhile getting involved in until we get that new high and we get the clarity from the Fed and Microsoft's earnings. And then from that point on, we probably get a lot more information here in the markets. And this is one of those days that if you were trading it, you should have been on the small minutes, 1 minute, 5 minute, 15 minute. If you were buying, you should have been buying with your investment brains on, not your swing trading brains on, and then getting ready for, of course, the ability for you to hold it through those portions. So both have picked up, both are slightly rallying here into the close. I mean, it does look kind of cool when you look at it on a daily, what it's showing us here. Pullback, bounce, pullback, bounce, close somewhere in here. Let's just say it does continue to rally here into the close. And then imagine if we get above this box zone here, starting to look very bullish all of a sudden, yeah? But we do need to remember we're probably not going into a V-shaped recovery. So regardless, this interest rate crap is going to begin and cause instability for some time. People are incredibly convinced now of 40 to 50% crashes for whatever reason. It's funny how the sentiment has changed so much. And I think a lot of it will come down to guidance and, of course, the interest rate hikes together. That's the big deal here, guidance and the other ones. Tim says, many people think of Apple as a safe haven play. Yeah, I agree. Everybody has gotten consistent with this idea that Apple is a massive safe haven for everybody. And I don't think it always is going to be this. Jay Neville says, I don't think it's a great idea for Apple to go into cars. It sounds good at first, but I'm not convinced it will be great for them. It's so outside the area of focus. Not going to show up yet, though, in its earnings or anything, Jay Neville. Technically, they are a tech company. I think that I think they've got to do something. I mean, let's face it, they haven't innovated in a long time. I used to work for Apple a long period of time ago, and I can tell you, I mean, I know the stock's done amazing. And a lot of that's because Steve Jobs set it up. But, they've lost all their competitive advantage that they used to have. I mean, their last innovation, in my personal opinion, is their headphones that I do own, and I do love them very much. But, yeah, they're just overrated in some ways. They haven't innovated properly, and companies are coming for them. MR3 says Apple is overrated, not innovative enough, chasing trends now instead of leading them. I totally agree. They used to come out and they said, come on, guys. We know what's going on. We know the future. Stuff all of you. We understand. We're going to do this. We're reinventing the watch, or we're reinventing the phone. And guess what? In many ways, they did. They haven't done that in years. They haven't done that in years. So that's a big thing here. And then Meowdy says Apple's processors and AR tech is years ahead of the competition. Well, they do certainly make things a big deal, but a lot of their stuff in the pipe has been due to Jobs and what he actually had still in the pipe. I haven't seen innovation from them in years, other than reiteration and improvement. All right, enough of that. Let's go through some more things here. So IWM continues to hold up. It obviously also fell, but all of these, no matter whether we look at the Dow, nice bounce here, Dow large companies, well worth continuing to watch here. Bull buying wicks off the bottom ahead of the JPOW, buying wicks off the bottom ahead of the JPOW. All the indices are showing the same thing. When we start scrolling through the stocks, we'll notice that we're still seeing an attack on big growth specifically, and we're seeing an attack across the board still on things like hyper stocks. So let's bring up a couple of stocks here, including the ones Durgesh wanted. So we'll bring up NVIDIA sitting on the daily 200 moving average, floating around here. A very important stock for many people's portfolios. People like this one a lot. It's worth 563 billion. I guess I'm on the record of saying I like the stock so much, but I certainly was super overpriced on it here. I just found it expensive. Volume is still trading very, very high. We'll find out whether it can live up to expectations. A big earnings result for this one. I think earnings and their actual growth curves are going to matter this season compared to others. So one of the questions we had was PLTR. This is a favorite of many people on YouTube. I never really quite understood it. I've got to say that, but that's okay. You know me. I'm not a big fan of things that have just IPO'd or just come into the market, however they've gotten into the market. PLTR has continued its decline for some time. Now, I know it has government contracts and that they're long lasting and people like that type of thing. Is it getting into value town? Well, I think for a lot of people, it is. The problem here is that we don't have any base. And I think this is going to be the biggest thing. I don't think you need to FOMO into the markets at this stage. Hyper growth in particular is down upwards of 80+% in certain stocks. To pick the bottom on these is very difficult. All right. They take a long time to form and you need to wait for accumulation bases. You will most likely not miss out this time round. And the reason why is because we don't expect a V shape. We mostly expect a consolidation, double bottom, some kind of non-explosive market. The Fed may not want to crash the market, but they certainly want to take the heater off the market. So here on PLTR, we've got the 4-hour 20 moving average. You'll notice it's holding this market down. And that's maybe one of the important first steps of recovery here on PLTR. So bounce has occurred. Now we want to see pullback either to a low or around that point. And then we want to see a grab, some form of accumulation base before we can be sure. Here it tried, didn't get back up, no buy. Stayed around here. If it had purchased up and gone past $20, guess what? That's an accumulation base. We would have looked at the volume, looked at the other things on their merits, and most likely placed a buy order, okay, at around that zone. That hasn't happened here yet on PLTR. So PLTR has put in a sell down to 11. It's recovered. It's holding. It might have some signs of filling that little gap, but at this stage, there is no signs of recovery. Does everyone else agree or do you disagree with me? It's fine to disagree. Andre says, how is PLTR crap? Well, I guess my opinion on it was just the price based on the original, movement and everything like that. And I guess I've been proven correct that it's crap from a current standpoint, but I'm sure it will improve. And it does have money and it does do certain things. And I'm not going to say that I understand the fundamentals of it. So at these prices, is it getting more into the wheelhouse of interest? Yes. Does it trade incredibly technically? Based on the left-hand side, I would probably say no, it doesn't. And I think a lot of this is because there's a ton of FOMO and a lot of message boards and people that recommend this particular stock. And therefore, it's actually not the best technical trade. And we've seen this time and time again for PLTR. It doesn't get there. Holden says price to sales was way too high, but it's a interesting company. # PLTR. Yeah, and I think that these prices, we're getting much more near the line. The main reason I hate, and I always call these things crap, is because when something comes out and it's got less than 12 to 18 months of history, I'm not necessarily convinced the valuation is correct. Because what happens in American stocks is they IPO, we see incredible booms immediately. If you got in before IPO, well done to you. Look ready to sell. Think about this: Coin, Hood, this thing, a lot of other stocks that have presented over the last year. So certainly a big deal here. And then, of course, they end up reverse and dump down. Kia says it's probably going to hit $30 to $40 in the next few months. Well, that's a very bullish scenario. And I think that's one of those things that if you have those scenarios and you're thinking investment wise and you're looking at the numbers and saying, I love this stock very much, and you believe into it, into earnings, then is this a price that's of interest? Yeah. I mean, you're probably basing around $10, $11. Worst case scenario. So pretty big deal here. 6 minutes till the close. So we'll just quickly keep going through these stocks. We got a super chat for Baba as well. So we'll just show you that one. Where are we? It's good to see a lot of opinions here. So Baba, I guess we suspected the first base was in for Baba. Let's have a look at the weekly here just to get a bit of an idea. So when you're talking about recovery, you're talking about a few different things. Baba has a 20 moving average problem on the weekly. That's its ultimate recovery line. Pretty much a downward trend that goes through these, plus the 20 moving average. Now, we've seen what we thought was a base in there. It had a long leg doji after it got through, had a rejection week, and sitting in the middle. I'm still confident to a degree that this is a fairly good low point here for Baba. It's showing the right signs. The first stage of recovery did play out. The second stage is through the 20. And until it gets through the 20 moving average, like we've always said, Durgesh, it's not showing full bottoming power. But the weekly here, long leg doji rejection, currently long leg doji. It's not moving as much as it used to, which is good. The volatility is coming out. And I think the big teller for you is just going to have a look at the volume, which has remained relatively high throughout this base formation. And that probably shows you a little bit of buying from institutions and hedge funds. All right, let's move over to Microsoft, have a look at the actual stock ahead of the earnings. Let's see what the market is doing with it. So here is Microsoft. It's actually coming back off the key support here, 2.54%. The US 100 actually down now 2.5%. US 500 down 1.37. So still just growth stocks getting pummeled more than anything else. You can tell this by looking at the Dow. Dow only down 0.43%, and even IWM down 1.33. So Microsoft into the close. It's just under the support. It's not going to mean too much. The market here sitting on the 50 exponential on the weekly. It hasn't really come down to this point many times, but when it has, this has generally been where it tries to get that reversal through. That's obviously 2020. This one here is just a standard pullback or big pullback that happened in 18 into 19. And it's overall held a very, very big trend on the way up. And that's that 50 exponential moving average. Right around here has been important. So we're going to close right on that, it looks like. Earnings will come up. It's do or die. This is a big deal. Oh, I'm excited. I'm a bit scared for some people because I know that some people are really hurting right now. And this could be the first true sell-off that they've seen ever, possibly in the market. A lot of people, anyone here entered the market after the March crash and has never seen a pullback like this, put your hand up. There's no worries if you never seen one before, but if you like that, let us know. When does Microsoft publish results? So Microsoft earnings should be after the close. Anyone got the time on it? Andre says, yes, PLTR has 30% growth and will be profitable in 2022 with no debt. Valuation high, but has come down. Exactly. So valuation has come back down. Possibly now you might want to look at it. And this is where you have to have your plan during these pullbacks. Get the companies you have high conviction in with current growth curves that make sense. And while everyone's freaking out about growth, this is the time to be able to say, okay, during certain periods, I'm going to pick up these stocks that I have high conviction with that are being mispriced by the market. We talk about it all the time. The ones that come back the biggest are the ones that actually were continuing to have healthy businesses. Buying a crappy company during a pullback is still going to be a crappy company. Now, here are the issues with today's market. The US 2-year has gone back up to 1.03, a full reversal here on the day, up 5.74%. VIX still above 30, showing it we still have a lot of volatility in the market. And US 10-year is now sitting at 1.78. So a lot of those things are showing a little bit of weakness. Gold, as we suspected this week, has been one of the best performers, even though it's only up a fraction of percentage. For a lot of people, this is a leveraged asset, and it's kind of trying to run ahead of this power stuff. So gold is doing okay. Oil is doing okay. These are pretty big things. And really, the other asset classes are just still capitulating, waiting for information. Tesla just floating around that 900 to 930.40 area. Not much to really report here on that one for the day. It rallied, filled the gap, and then sold back off. So we hit the trend line. That's the community trend line. And Tesla's really just all about earnings here. Any of these prices are fair for a lot of people that if they believe in the earnings. But if it gets underneath the trend line, then we have a lot to talk about. If it starts rallying, of course, then we look for the next resistance. Nat says Barber will wait until 20 weekly SMA reaches the horizontal trend line. Certainly a very good point there. And here we go. We've got the close. Let's just quickly bring up here some of the stocks in terms of their announcements and then when they're coming out. We'll get some hands up going here. People are putting their hands up saying that they have never gone through these types of pullbacks before. So pretty important factors here in the markets. And someone said AMD, ouch. How much was AMD down? 4.63%, back down to a 111 rating. Yeah, AMD not necessarily too trustworthy, that particular stock. Okay, so we'll just quickly scroll. We'll leave Microsoft on the chart here for a second. I just want to take a look at Take-Two for a second here. So Take-Two bought Zynga. Interesting how they instantly filled that gap. A lot of these game companies really did start to go quite well. So here we go. We've got Post so far up well, that was all over the place. 1%, 0%. What the? Did you see that? It's just like 1.5%, and then was 0 immediately. Whoa, that's some wild swings. Reminds me of the earnings we saw, I think it was last year, and there was like one swing where it was up 3%, then it was up 6%, then it went down 15% or something in about 3 minutes around the earnings. This is crazy. Negative 3%, then 0, now 3.28, 3.5, 3.6. What the? 4.22. Futures now dropping here. We'll watch the NAS next to it, the futures of the NAS. Bring that down to a 1 minute chart so we can see the real interaction with the zone. 4.3, 4.6. Oof. Microsoft crashing, yeah. Do you see how it was up about 1.5? 0 again. I don't know why that reading keeps coming in. Now 6 down. Oh, that's bad. All right, let's bring it up. Gareth says Tesla moved 2% in 15 minutes earlier. Yeah, this thing just went 1.6% up, though. Big company to 5.2% down on a $2.16 trillion company. That's a big deal. Ouchie, ouchie. Now down 4, US 100, down to 14,100. So this is the beginning of the big earnings here. Someone just flick me the report in Discord just because I've only got one screen at the moment that's probably active. Here we go. Matt P's got it. Microsoft Q2 EPS 2.48 beats 2.31 estimate. Yep, Matt, can you just quickly grab through the guidance? We need the guidance. So Q2 of Q2. Microsoft beat on everything and tanked. Yep. The big thing in there is going to be, and I think that's pretty important. What's the guidance? Give us the guidance. We won't have that yet, yeah? All right. So a lot of fear overruling everything. It's all about guidance. That's correct. Sales 51.73 billion versus 50.88 billion as expected by analysts, according to Rev. So one of the best companies, the ones that we expect to actually technically beat. The market is down. This is the kind of fear that we still get in the market. Now, that kind of earning result probably should have sideways to slightly discount the market. But this is what's going to happen. Let's think about the facts here. The facts are that we have not even seen an interest rate rise yet. Okay? So we haven't even seen an interest rate rise yet. The markets are going down on earnings that are still beating expectations. Now, obviously, there could be a slowdown, and that's what the markets are doing. Remember this, everybody. Markets are 12 to 18 months in the front. So they are always looking in front of what's happening. Right now, they are pricing in over 4 rate hikes. They are pricing in the idea that there is going to be a slowdown in these earnings and guidance from Microsoft, Apple, all FANG stocks, all growth stocks, and that all of this beautiful money is coming to an end. Now, the market is actually very rational, and I'll show you how the market is rational by using Apple as an example. So if we actually think about Apple, the easiest way to look at it is this. The market rallied massively. We all know the market rallied massively coming off the base here in 2020. If you actually look at the earnings, though, the market repriced to an insane PE ratio that was then met by the earnings and justified the share price. But while it was justifying and beating on all these EPS revenues, you'll notice that Apple, the actual stock itself, was not going up. In fact, it was going down. And that's because they'd already repriced using algos and spreadsheets and all things, trying to get themselves to that level. So, yeah, it's a big deal. All right, so Microsoft's come out. It's beat on some things. It looks like across the board. The market does not like it, and it is still selling it off. So it now comes down to the Fed at this stage to give us a bit of clarity here on exactly what they're planning on doing. Market doesn't like uncertainty. And, the big thing here as well is we've just placed a low. If we think about this NAS, we've got a low here coming into the Fed announcement that has a dead cat bounce in it. If we close underneath that low, that's really bad. As you know, this is a bullish hammer that should be met by buyer demand again. And in previous bullish hammer situations, we've often seen, or previous lows, we've often seen a retest of either exactly on the low or a slightly lower point and then a bounce. Over here, very similar thing. Now, when it breached underneath that, it caused a full-on big crash day that was then met by buyer demand. So just remember, it's a big deal if it gets underneath. At this point, it looks like Microsoft, one of the ones we expected to probably beat, which did beat, is going through its support after hours. So the Fed's announcement becomes even bigger information. It's kind of unfortunate here. Mr. Keithy says, how stocks like GME going? Just curious. Yep, we can scroll down here to the GME, and it's actually only down 0.36%. AMC's lost its diamond hands. It's down 3.73%. But for whatever reason, the GME hodlers are still holding fairly strong. I'm surprised it's still $100. I would have thought it'd be 50 by now. We don't want you to do that, Chris. I hope you don't get to do that. I thought you said we never close below the S3. So if so, don't you think we'll stay put until Feb 1st? Yeah, most likely we will hold these areas. Very unlikely to go underneath an S3. You are correct. The only times you've ever gone underneath S3s, and what Gary is talking about is this. If you go to indicators, you bring up pivot, and then you go to these, add it on. Make sure whenever you add the pivot indicator on, you go to settings, then get rid of all this stuff. Yeah, just get the monthly on there, and that's it. You'll notice that we hit the S3. Now, the S3 monthly pivot is pretty rare to crush. Okay, we've crushed it once, which happened during the pandemic, and you notice what ends up happening there. But you scroll through the years, it doesn't crush very often. This was a heavily compacted one, small crush underneath here. It's very rare for it to get underneath these S3, and if it does, it often means more capitulation. So we're sitting on point of extreme support that you often don't reach, and S3s can continue to hold or at least find base around those points. So yeah, I mean, pivots, they're only one indicator. We now have a buying bottom wick, so we know where that is at least, and we also know that there was strong buying here, or at least strong options movement at this point. 4,200, key psychological, key area. Microsoft buying back a little. Yeah, I would hope so. I don't think this is a terrible price for Microsoft for investors when they think about it. It just hit the low of the previous session, 276 here in the post. So it's right on that buy wick that we saw. It's a good company. It's unlikely that it doesn't continue growth. It could create growth due to the pandemic environment that could continue for years and years and years. And remember, they've got a subscription service where they can also up the price. They're going to be the third biggest game producer in the world, and I'm excited for their game production because I think they can turn around the hideous ship that is Blizzard Activision. And if Blizzard has some of the best IPs in the world, and if they're able to get a good culture in there, come 2, 3, 4, 5 years, I believe they have the second strongest game franchises in the world after Nintendo. It could be a fantastic time. Thank you very much to the 1,043 people that are joining us. Appreciate the likes, guys. If you do smash the like, it does help us out. We will be creating a video today. I'd want to make a quick announcement. Unfortunately, in some ways, I actually will be away for the Thursday, Friday for my time, which will be tomorrow after the Fed and then the next day. I will still create a video discussing the Fed's result and publish it on the channel. So don't worry, I will still be doing that. But I will not have live streams set up for tomorrow and the next day, okay? So, or if I do one tomorrow, it'll be impromptu. It'll just be because I'm up early after the Fed and I have to do some trading. The weekend video will continue, and of course, we will discuss all of this. And I do apologize for that, but unfortunately, I've got to not be here for that particular one. So it'll be laptop only, and I will be doing my best to bring you the content that obviously you guys deserve. So yes, we've got Microsoft here after the earnings, some recovery coming through, some reprieve, down as much as 5%, now down 4%. Oh, geez. I mean, it's a great company. It's got great future. What's the discount we're actually even seeing on this top to bottom now? So top to the low here was 20%. Pricing was down as much as previous October. So it's just been such a strong business. We're not exactly getting a discount on it as much as maybe some other stocks, but still very cool, 20% down. So 3.46. Let's look at the overall NAS again. So NAS down 14,075. So some of the things that we're looking for to show us a reversal is a big switch from the put side to probably a huge buy of calls. like a huge buy. Obviously, still have a lot of puts in the market. Then what we also want to see is we want to see that treasury yield coming down. So the US 10-year consistently coming down and the 2-year coming down. And on top of those things, we probably want to see increased volume as well. So a lot of activity. If you think about most lows, whenever they form, you get those kind of incredible spikes in volume. Now, we've seen one huge spike in volume, but we need to see big volume activity, huge transactions going on, just like we saw through the pandemic. And then we want to see some kind of snap of a high. So in this case, we do have a high that's of interest that's caused by the dead cat bounce. There it is, around that 14,600 here on the NAS. We break and close above that. Guess what we've done? We've put in a low, we've consolidated and had to think about the markets. And at this point, I think a lot of traders will be getting back into the market and excited about it. But do be warned, this one's probably going to look like this over the next couple of months. I don't think it's going to be V-shaped. We asked the community that. It's more likely to be something like this, which is what we've seen almost every other year other than 2020. So clearly the Microsoft overreaction is showing some bullishness here. NDX is still above its 15-minute 50. Not sure why it got bashed at the end of the day. Kevin, the answer is Microsoft. People were scared about that. Enjoy the ribs. Yeah, we will. Fusion 301 says, bought the Microsoft dip and I'm YOLO. All right, good luck, man. And the VIX has to come down. Yeah, well, we've already seen the VIX kind of show itself as in its final form. The VIX Dragon is in its final form. It's unlikely that the VIX, I mean, obviously it forms a new low. The VIX might go higher, but the VIX seems to have topped out. It's very common that this is what happens during these types of crashes. You see the VIX kind of waving up here, which was unusual. And then it just goes boom, spike, creates that massive FUD, that massive fear, dumps down and starts to become erratic, which is exactly what it's doing here. It's becoming erratic. Now, in most cases, this will be the end for the VIX. You can see when it starts to get erratic, like this candle over here, which looks very similar to today, that can be the end. There was one case where it wasn't. And that's obviously where the buy the dip initially over here during the pandemic crash, it became erratic and then it made a new high. This is super rare, okay? And to have something like that occurring, you really need a black swan event. Again, look at the facts. Do we have a market that is currently showing earnings decline? I would say probably not on the big companies, like we discussed, Microsoft, etc. Not really an earnings decline. Do we have interest rate hikes even coming through yet? The answer is no. Do we actually have anything that's super scary in the market in terms of huge cracks? We have negative news and negative emotions, but we're not looking at a Lehman Brothers just yet. We're not looking at something where the market is showing us a crack that is so big, like an Evergrande situation where no one can look after it, like the Chinese government did in this case. So I think this is important to keep in the factor of our minds, the type we're in, it, all of that type of stuff. MR3 says, actually, the 10-year will tank the market more, but I guess we'll see. Well, if the 10-year goes up a lot, it will hurt the market. And at this stage, TA would dictate it's on support and it's looking like it's bouncing. What about the Russia situation? I'm not going to eat into that one. I don't believe that's going to cause market instability that's long lasting. Market will drop 2 steps down, 1 step up. We are in a downward slide. So that concept is this. Basically, we get decline, pullback, decline further. That obviously is 2 steps down, pull back, 2 steps down, the standard kind of swing down market. That's the type of thing that Cover Calls is saying. Makes sense also because his name is Covered Calls, or her name is Covered Calls. I do love covered calls. Hey, I'm sitting okay right now because I have a lot of covered calls on the market, so I'm feeling pretty good. But that being said, that not everybody has that. We need to understand that not everyone's gone through these types of pullbacks. A 10% pullback in the S&P 500 shouldn't scare an investor, and a trader shouldn't really be worried either because they should have an entry, a take profit, and a stop loss on every position that they trade. This is the importance behind it. If you feel like you're a trader and you're losing tons of money, not an investor, a trader, where was your stop loss and take profit? This is the problem with many people that are just getting into the market. They don't consider that they need a stop loss and take profit if they're trading, especially with leverage, which I'm sorry to say a lot of people have gotten beaten up here. Mercia Dragon says, after Jerome will speak, we're going to see a melt up. Well, we're certainly going to see some volatility and hopefully some consolidation here. How to set take profits, says Diego. Technical analysis, man. And a mixture of fundamentals if you want to. So for an example here, a logical conclusion for the S&P 500 maybe is if you were trading it, let's say, and you were thinking about getting in and bringing in profit, you might say 4,500. Why? Previous support, very clear. Little bit of issues around here, psychological zone, all sorts of reasons. So let's say you bought here, you might have a take profit at 4,500, descale your position partially, then look at 4,600 and so on and so forth. The key to setting good take profits is always to look at the left-hand side and to understand where your key areas are. And once you know that, just like we've always had with our community trend line, I mean, we had a trend line that was going for what, an entire year, over a year on the S&P 500. So we had like a trend line that basically went through all these peaks and gave us a really good play at where we might want to reduce positions. All right. So this was our community trend line. We had our buy the dip kind of idea, which was 20. Obviously, this is the first time that's failed. 50 becomes the next area. And that's the type of thing that we're looking for. But use price action to dictate take profits. And if you don't have price action and you're in uncharted territory and an all-time high on a stock, think about psychological numbers. 100-point increments, $10, $100 for certain stocks, and fib extensions as well. They can all be quite good. Any thoughts on SoFi? Should we buy it or not? SoFi, it's probably not a stock that's in my wheelhouse of understanding. I know it's incredibly popular again with retail traders. I know that this is coming under a lot of scrutiny. The one thing about SoFi is it seems to have it's like PLTR in some ways. It has a very consistent FOMO base, and I think that can be traded to a degree. It's come back down to what price here? So it came back down to about $12. Yeah, I could think of much worse prices for it. Volume is consistent through these bases as well. A lot of people are buying it. People are still bullish on it. And you know that when it ramps, which during good times it tends to, it goes on pretty huge runs. I mean, you're talking about over 100% gain here in this particular stock. For me, it hasn't found necessarily full-on base, but let's have a look at the small time frames here. Let's go down to a 1 hour. So nice buying at $12. Clearly some strength there. Huge rally here, which are the types, and that goes straight into a resistance, which it then sells off from. Okay, interesting. Got problems around 14, so it looks like every $2 increment is something that you might want to be looking at. There's no price action other than the $12 support buying that we think is that interesting. But the big rallies and the big dumps are kind of scary. It is what it is. Did someone say Microsoft's down 10%? Really? Oh. Punk Skater X. You scared me, bro. I thought it was down 10%, dude. No way. Microsoft down because they overpaid for Activision. I don't feel they did actually overpay for Activision. I think they get a good deal. I feel like I understand Activision. They're a hideous, hideous company. So bad. But if they manage to get their brand, get their Blizzard stuff, get their Call of Duty, and they manage to actually brand it correctly and begin the glory days again, oh, they could make so much money. And imagine if they bought NFTs. Their Game Pass is going to be such a hot proposition in the future. I'm going to subscribe to the Game Pass. Everyone's going to have the Game Pass. US Tech 100. Al Trader, you're going to have to time you out, bro. Too much spam, man. Too much spam. So we've seen today a huge market switch. Obviously, Dead Cat Bounce was our idea yesterday. Bear Trap was our idea the day before, which we did see that huge rally off. We're not negative on markets overall for the medium to long term. So we're not going to call a epic crash that can't recover here. At this stage, we still think the markets look relatively okay. Don't necessarily always be a doomsday prepper. People are saying 1929 happening again. I understand the correlation. Just remember, there was no Fed, there was no market support back then, and there wasn't as many great maybe companies with earnings. There's a lot of zombies. I think the US market has something like 15% or something zombie companies in it, which is an important factor when you're thinking about declining markets. But we've also got to remember this is not a dot-com bubble in the same way. And the real way of doing that is just to go and look at the biggest companies, which we did from a fundamental standpoint, and ask how overpriced really are they. At some point, whether that's right here or whether that's a new low, again, we're not convinced on the longer term investment is here just yet. This is just nibbling points. And then we've got nibbling points until we find that accumulation base, which we will see through technical analysis. Something similar to this time would be fantastic. We could look at investment. But yeah, all those comparisons to the bear markets at this stage is going to be tough. If we get underneath the wick, no doubt weakness is going to continue. But at some point, the opportunity and growth this year, we're going to get a phenomenal opportunity. That's my opinion. I'm going to stick with it. We obviously here let the technical analysis tell us the way. And that's why all we know is we've hit a cool zone being the 50 exponential moving average, the blue line on the weekly. We like the 50. We've liked the 50 before. It's been during a time of fear. It's been a good level, but we know that when the 50 is broken, just like it was here on the left, bad things can happen. Yeah. So we take nibbles on our investments. We trade nimbly. We trade quickly when the VIX is above 20. We obviously look at the 5-minute, 15-minute. Day trading right now is the way to go for sure. And then once we get underneath, if we get underneath these supports, then we look for the accumulation basis. We look for the lightning bolts. We look for the signs of recovery. And hopefully, if you enjoy our content, you join us and you follow along with our stuff. Subscribe and, of course, like it. We do appreciate it. We're going for 100K this year as a community together. And jump into our Discord as well. We just went over 6,000 people in there. We've got some great guys and girls that really share some of their knowledge. And the great thing about our community is I think people are very level-headed. There's not this FOMO hype stuff that goes on. It's more, let's make some decisions on some blue chip stocks, do it logically, and have a proper discussion about it, which is a big deal. Looking pretty bearish. Yep. Go back to the general stats of the year. Just quickly here, let's do a synopsis. Okay, so we expect the volatility. We've been saying that all year. And then the next thing is we still expect growth to have kind of like a weakness period through it. And then hopefully we get into that strong. Imagine if we see a double bottom coming into March or April on the Nasdaq. And we know what the seasonality behind it is. I would be hard pressed not to be incredibly excited about that, and I would be. If you get seasonality with the idea of decline into recovery on TA is our advantage in this case. Midterm years, obviously weakness. Next year's technically every time has been very strong positive correlation. I can't ignore that stat. That's going to be hard to ignore. You might say this time it's different. And then, of course, we've got this rate hikes causing market instability. But then a year later, in general, we've had positive markets. So again, most likely opportunity. Here's the earnings reports. Of course, Microsoft came out, beat on everything, but guidance is the key here. Then we've got Boeing before the open. We've obviously got stuck in between here. We've got the Fed, and then we've got the big kahuna Tesla, followed by the big Apple on the Thursday close. We'll try to cover it as much as we can over the next couple of days. I know a lot of you are hurting out there, and I do hope that either you learn from the experience or you're able to turn it around in the future, or it recovers, or whatever needs to happen happens for you, because it's not cool seeing anyone lose money. But you need to understand the market is brutal, the market is nasty, and you've always got to think about your risk-adjusted returns. The YOLOing, which we suspected, the YOLOing FOMO that happened in 2020 and 2021, it's not going to always be there. Markets return back to normality. And this is, unfortunately, for anyone that's been around for a long time, fairly standard. I know it doesn't look like it, but we'll get the community. Anyone that's traded for over 10 years, are you incredibly scared by this move? Tell me. Finken says FOMC before evening earnings adds that, hopefully adds some stability. Yeah, fair enough. Giovanni says SQQQ up 2% after hours. So that's obviously the short Nasdaq. Doesn't look too good. Well, that's thanks to Microsoft. So, yeah, Microsoft earnings got that one through. And here's some people's opinions. This is 10-year plus veterans. They say, don't panic, Tom. It's going to be bumpy on the way down. I trust in year on year, which I think is what Magnus is saying. Giovanni, been trading for a while, is not freaked out. Kaz, not freaked out. John Doe says, nope, love it. Gorilla says no. Kevin says no. Media Lab says yes. Okay. Same old, says Llama Mama. Nice picture. No, not scared. Not even in the slightest. 10 years. That's half my lifetime, says Andy Pandy. Can I take your life? I'm 30, was it 34? 34. So I want to go back 10 years. I'll go back to being 20. You can come over here and I'll take my brain that's now very in tune with the market, and I'll go back to being 20. Thank you very much. James Gale, if it keeps dropping, yes, lol. You shouldn't be scared till under 20%. And Ginny is not pleased with the declines. Unfortunately, Ginny, I think that's probably because it's a little bit of hyper stocks, maybe. No minor pullback. Way more than 10 years, and no. Yeah. And PS3 Pawns says double down on my NVIDIA position this week. Last time I bought was at the same levels a few months ago. Can't believe I was able to sit through the FOMO from 200 to 350 and waited for it to come back down. That's pretty important. That's pretty cool, actually, that you managed to do that. There's nothing wrong with trading the FOMO, though, yeah? Remember, entry, take profit, stop loss. You get hit, you move on to the next one. Here's an example of buy the dip not really necessarily working at this stage. Just, of course, remember Netflix and NVIDIA is the go-to at the moment. A great company, a very promising robotics future. I say this again, NVIDIA Shield, NVIDIA Shield, NVIDIA Shield. If you have a television, consider the NVIDIA Shield. It's pretty good. I wish they'd release a new one, though. But it is fantastic. So we're sitting on the daily 200. We've been as low as 209. Obviously, the big key kahuna, huge support that you would all love to see would be around this level here, which would be that 150. It sat there for a long time, then went bonkers. Probably will decline partially in some earnings due to crypto. If it stays lower, just remember that can hurt, of course, graphics card sales. But this company is much more than that. and it is a great one. It's one of my favorites in the market for sure. All right, guys, we'll leave you at that. I'll go create the daily video and talk about everything that we're seeing right now. US 100 still down 3.54%. That's thanks to Microsoft. And we'll just have a quick look at after the close here. So it's back down to 4.46% down, 275. So that's actually a low underneath the wick purchasing of the previous session. So unfortunately, Microsoft not coming out with the goods. It beat guidance. It beat expectations. But the market doesn't like the current valuations. We're starting to get into that territory where now we need to bring together our fundamentals and our technicals and our knowledge of our stocks to get the bias that we need. Because if we have high earning companies that we believe are in growth phase and we're starting to see the PE turn around and come back down to a more average PE, possibly that's an amazing opportunity. So we'll see you next time. Thank you so much. Oh, we got one donation coming in here from Mitchell Miller, big supporter of the channel. Appreciate that, Mitchell. $20. Let's give him a clap. Thank you very much. Hey, Tom, before you go, what's the private trading community like? Well, it's pretty good. So again, not much FOMO there. The big thing is in the private community is, of course, we have the robot. So you get access to the analytical robot that we sometimes use on the actual channel. And we also have Monday private hangouts every week. We've got Tuesday, Wednesday, Thursday, Friday content. And of course, a great community of people that share some really great ideas. A lot of people have also done a little bit of extra stuff with us. So they understand, most people have done the course as well. So they understand the kind of way we think about things. So I think that's a big part of it. But there are some interesting and exciting announcements that are coming this year for the community. And that's going to be a big one. I think we're going to really take it to the next level. I'm planning on getting someone to provide even more daily content for you guys, which is based on everything that we like to do. So I think it's going to be cool and it's going to be good. Thank you very much, Mitchell Miller. Appreciate that. Thank you. Kevin says QQQ fell apart in the last hour. It wasn't Microsoft that caused that. I think it was a rug pull and something Biden said about the Ukraine and pre-Fed thing. So I think pre-Fed thing, pre-Microsoft thing, Kevin, in my opinion, both those things helped. And look, we said it in the last video, dead cat bounce, yeah? This is the type of thing that happens. You're in instability. And when you create instability, you get huge rallies followed by usually secondary tests. And if you go through history and you look at the previous supports, that's often what happens. We come back to do retests. We retest the low a few times before finding support. Here's a low that gets retested, finds a buy, doesn't close above, and then sells off. That's just from 2021 in March. So it's a very common thing that occurs here. And Daman Saini says $2.99. Hey, Tom, just wanted to say hello. Happy Australia Day. Yeah, so for everybody out there, thanks so much for the support. Happy Australia Day for every single one of the Australians that watch the stream. We have many, and I do want to wish you all the best in the markets. I know these times can be really tough, especially if you're positioned long. It's not cool to lose money. It's not cool to have your investments declining and all your great gains to go away. It's the reality of markets, and it's what you make of it here. Have your plan ready. Get ready for the Fed, because the Fed should give us clarity, and we are going to wait for the price action. We are not necessarily saying the bottom is in yet. We don't know that. Anyone that tells you they know this is the bottom is probably purely guessing or lying to you. We don't know exactly where it's at. What we're trying to do now is find a technical reason to see that follow through that kind of proves to us that we've maybe put the base in. Where's our lightning bolt like last time? If you go back and watch our videos, we had to go bullish here. There was no choice. Now we're sitting at a zone where it's declining into the Fed announcement. It's going to put pressure, it looks like, on the bottom, and we'll get some clarity. 2 o'clock, 2:30. Know your times, know what's happening. FOMC, first time we actually care about it in a long time. And we'll find out whether the Papa Power can support the markets. Thanks for the support, guys. We will see you soon. Ken Demir says, I will buy Amazon at $50. Might have to keep dreaming on that one, unfortunately. Okay. Catch everybody. Bye for now.